Hello, good afternoon, everyone. Welcome. Today is a very interesting date, 22nd Jan 22nd. I really love the way it gets pronounced. And we are going to be talking about Nifty today. And the idea basically is to help you understand how the markets are analyzed from technical point of view, and from there how you really make your decisions to make maybe not millions, but at least lakhs, hundreds of thousands with small profits. And before I talk about all these things, let me first get the disclaimer out of the way. Investing or trading is very risky. You need to evaluate your risks before taking any decision with your hard-earned money. This presentation does include market analysis, a lot of it, but all ideas, opinions, and forecasts expressed or implied. Information, charts, or examples contained in this class are for informational and educational purposes only. Don't consider it as a recommendation to invest or trade or take risks in any kind of markets. My goal is to enable you with the knowledge. You analyze it yourself and then take your own risks. Financial success depends on various factors, internal and external, and we cannot take any responsibility for your financial success. So with the risk disclosure out of our way, let me start talking about our January trade. Okay, we have to first prove before we can talk about it. So in the beginning of January, when I was also working on my technical analysis pieces, I thought, let me do some trade in front of the audience. We have got about 100 plus people on the group, and in that group I have been showing every trade whenever I have been taking for this particular expiry, and explaining why I was taking the trades. But then behind the technical analysis behind it, I could not explain it on the WhatsApp. So I thought let me just take you through it quickly, and then maybe build upon that, and to tell you how you could actually do the technical analysis, not for knowing where the market is going. That is okay, that is good thing to know, but more importantly, for able to make money. Okay, our goal as trader is to make money, right? Even if I go 100% wrong in my analysis, I don't care. Okay, as long as the money is coming into my account, that is the goal, that is the most important thing. So let's talk about the trade quickly. So this trade, this is the final situation as of today. If you really look at it, if the market is above 18,100, it is going to be making around 91,000 plus profit, 91,000 profit. Okay, and this is traded with Nifty 4 lots. And I have also talked about margins, and I will talk about margins also a little later. If the market remains between 17,600 to 18,000, then I would be making around 1.06 lakhs. Better, much better. And if the market happens to go below 17,500, then I'm going to be making around 1,24,000. Very good. And now this particular strategy is a zero risk strategy. If you look at it, the probability of profit is 100%. It is definitely going to make the profit. The maximum margin that we had on this particular trade all along, it ran for about 25 days. Maximum margin was about 5.15 lakhs. Average margin was around 4 lakhs. So if you consider the margin to be your investment, your return on investment is 20% above. Okay, maybe if I ended up with 91,000, I don't think market is going to rush above 18,100. But even if it goes, I would be making 91,000, which is also 91,000 of 4 lakhs is more than 20%. So we are talking about 20 to 30% profits. 1.21 lakhs. 1.21 lakhs is about 30% profit. I mean, if I am able to trade like this, 3 months, I'm going to double my money, right? It doesn't happen like that, by the way. You will also have days where you would learn less. But this month, the market has been really helping me because it moved very drastically. Let's just look at it. Okay, I'm going to run you through exactly what I looked and how did I make my decisions and what were the decisions. We could have done better. We could have earned more. Of course, there are people always, how much ever better you do, dil mange more, right? You can always, maybe next time, let's see if we could do it better. So this was the entry day, 3rd of Jan. And actually, if you ask me, the right entry period, right entry date for me was 21st of December. But I was relaxing and not trading towards the end of the December. I usually avoid trading in month of December or reduce my trading. I did not take it. But anyways, when I saw this particular opportunity, you see beautiful divergence, you see the tunnel getting hit, and then you see a very nice bounce back, and everything was aligned very well. And if I look at my theory of Nifty for long term, I was expecting one more top to be made. And if that top needs to be made, then Fibonacci and other things showed me that the target for the top should be 19,200. And that 19,200 level. But even if the top is not going to be made, my first expectation was 18,000. The market was 17,000. 17,400, 500 level at that particular time. It closed at 17,345. It was little above 17,345. And first target was 18,000, around 600 points. Second target was 18,500 at that point in time, Fibonacci targets. And the final was 19,200. And I thought it would make good money, but I didn't want to risk. Okay, as a trader, the most important thing was to reduce the risks. So what I started with a strategy was something like this. And if you look at the middle graph, it would make me very less profit, 3%. 3%, I am also happy. Okay, if I take home 3% every month, I would be probably doubling my money in 2 years. I mean, much better, right? 3% a month, I am very happy. And I was able to make about 3% as long as the market was above 17,000. 17,000, little lower than 17,000. So near about 400, 500 Nifty points. Nifty can go against me, not in my direction, can go against me. Even if it goes against me, I would be making 3%. Perfect, right? Chid bhi meri, pad bhi mera. And if Nifty would start going above 18,000, as I expected, then I would continuously keep on making money. And if it was 19,200, I would make about 3.7 lakhs on capital of 4.25 lakhs at that point in time. Looked very nice trade to me. And at this point in time, because the market was going down, a lot of people expected the markets to continue to go down. So there was no major buying in call options. The call options were not very expensive. Okay, and that's the trade that I took. Immediately, just 2 days, I didn't have to wait for a long. 5th of Jan, the markets were kissing the first target of 18,000. So I thought 18,000. My target was actually 7,991, which was 161% of wave 1. And I saw my targets to be coming closer. And after wave 3, there would be a wave 4. Wave 4 is going to be a sideways wave. And this is what I had written. I expect the markets to go sideways. So when the markets go sideways, my call, I am long call, my call will start losing money. So I don't want it to lose money. So I sold above strike price. 18,000 I had, 18,100 if I remember right, I sold. Okay, 18,100 C I sold because my target was around 18,000. I wanted to give it little bit space. I have seen many a times markets would go above and then come down. So I don't want to be greedy. I kept a little more space. But now when I did that, okay, the only difference is first trade was taken 17,400 around. Second trade is taken near about 18,000, actually 17,900 around levels. And at that time, if I take now, my lowest profit, if it was above 17,000, is about 57,000. From 17,000, which was 3%, now it has become 57,000. So I booked my profit. Okay, and this profit would be there as long as it remains above 17,000. Now the market is at 18,000, 17,900. 900 point I have got buffer. Even if the market goes against me, turns around and gives 1,000-point move, I'm still going to go home with money, not some money. I'm going to go home with 57,000. And at that point in time, my total margin was about 5.15 lakhs. Okay, 57,000 is about 10%. Just 2 days later, now I am hopeful to take about 10% of my investments home. Okay, and if the market happens to go above till 18,100, I would be making it in 87,000. Perfect, right? Just 3 days and your trade is moved. So this is the beauty. If the market is in moving, and if you are a directional trader, and if you are able to hedge, and if you are able to get the lock in the profits the right way, because there are options traders. There are two types of options traders. One type who is looking at sideways market and they want to make money in sideways market, high probability of win and low percentage of win. Then another kind of traders are what I do. I look at the trends and I trade with the trends. And when I trade with the trends, I get huge profits. And I'm also trying to reduce my risk. So now my risk is near about zero, right? 1,000-point Nifty, 57,000. And I have got so much of time. Even if Nifty crashes by 200 points, I can book my profit and I can go home, no problems. So that is what I do. Now, after that, although I expected Nifty to go sideways, and Nifty did go sideways little later, it went sideways. It had a correction. It went around here and there. It went all the way to, I think, 18,100 something, and then came back, corrected, and then after correction, it again started going up. When it is going up, I am going to be making more money. So I don't have to rush, and I don't need to take the next trade. I am just looking at the markets. Very nice. Now from 57,000, 87,000 is my potential win, and I'm pretty happy, right? Anybody would be. But at the same time, I'm also looking at the wave structure. This is 25 minutes. So if you look at it, we have got 1, 2, 3, 4, and 5. Very nice Elliott 5 waves. And after 5 waves, there is going to be a correction. And if this is wave 1, then wave 2 can retrace by a good decent amount, right? So the first target was the low here, which was around 17,600 or something. I don't remember the levels. And the next level was way below. Okay. So now the markets can correct by a large amount. And if you really look at it on 25 minutes, I have got divergence. I believe the yellow bars are getting printed. We are we think that now market is going to top sometime sooner. Okay. And at that point in time, now what I did was I actually changed my hat. My hat was market is going to go from 17,300 all the way to 19,200. But now markets don't go in one direction, right? Markets will go up, then come down, retrace, whatever. So now I want to make sure that in the retracement I make money, but whatever profits that I have earned, I want to hold on to it. So what I did was I bought 18,200 P. Okay, but here I did not buy all 300 quantity. I was playing with 300 quantity. I bought only 150. Why? The reason is there is a preemptive trade, and if the market really wants to go up, which my expectation was, I do not want to take out all the money from the table, right? I still wanted to make money. So now my 57,000 that I was earning, if it was below 18,100, now changed to above 18,200. So if I am making, if the market closes above 18,200, which the market was, I would keep profit of 57,000. So I want to, whatever money that I expected to earn minimum, I'm still making that kind of money. If even if the market starts going up and up and up, but whatever goes up has to come down also. So that was it. And then if it goes down, then I would start making more and more money. Okay, because I have a short call 17,000, I would be making money till 17,000, and then after 17,000 markets will start going down. So till 15,600 now I will make money. Can you beat this? I mean, a strategy which I took in on 3rd of Jan, I'm on 12th of Jan, less than 10 days, 10 calendar days. And I'm already saying, boss, markets, you go wherever you want, as long as you don't go more than 3,000 points, near about 2,500, 2,800 points. If you don't go down more than 2,800 points, you are going to give me a check. Decent amount, at least 15%, 10%, 15% of my capital, and I'm going home with my money. So this is the kind of power that we have. So I took this, and surprisingly, market did not turn around at this level, which happens. I mean, whenever you are looking at analysis, this happens. It happens many a times. The markets went near about 18,400 se thoda kam. I mean, it went a little around 18,400. So markets actually from there, if you look at this, markets went sideways for some time, then again gave one more up move, and then markets had dup. Usually, a lot of times you would see the markets correcting like this. Okay, when markets correct, this is also called as a 3 black crows candlestick pattern. When markets correct like this, markets usually they say markets go up by stairs and markets come down by jumping out of the window. So that is what the markets did, and good that my Elliott count helped me. Good that my all the money that I had locked in, and I did it thanks to markets. I mean, markets are king at any point in time. So I was making fairly good amount of money as of yesterday, 21st of Jan. So now what I had was a strategy which will continue to give me more money if the markets go all the way to all the way below 17,000. But here I believe that the markets want to take some rest. It was at the wave. There was a doji candle yesterday. There were a lot of things that aligned at this price point. And from the way 17,500 the markets reacted, I got a feeling that I don't want to be taking a lot of risks. Whatever money I made, that time around 1.1, 1.5, whatever, 1.05 lakhs, I want to take home. So I don't want that you had that slope, right? If it goes to 17,000, make 2+ lakhs. But if it goes to 18,000, then come back to 50,000, 56,000. So I didn't want to give away that kind of money, right? From 1 lakh 5,000-6,000 to 56,000, give away half of it. So what I did was I booked on my 18,100 CE. I moved that to 17,600 ATM CE, so that now if the markets go up, I am going to make continuous profit. And I also moved that 17,000 PE short, which was taken on the first day, to 17,500. So now what happens is, now I am reduced with the position from 300 quantity 4 lots, I have reduced to 2 lots, and I have booked maximum of my profit. So after that, now currently as I stand, my profit can be, minimum profit can be 51, sorry, not 51, 91,000, and maximum profit can be 1.21. I cannot lose this trade anymore. And all that it has happened is between the Nifty move from 17,400 to 18,400, I'll take, and back to 17,600. So whenever markets are moving like this, the option traders are taking lots of positions, right? And you want to be one among them and just take a position, make your money, go back home. Okay, the goal is that. The most important thing that helped me was the technical analysis. Okay, and I think I have excited you enough. I have given you enough reason to be with me and to listen to whatever I talk, so that you will learn a little bit. The goal here is that you learn and you go home and you try to implement it. I would love to see people implementing what I teach. Okay, so let's go back. Let's start with a story. If you, not if, you must have listened to this story. So I'm just repeating it one more time. Okay, so there is a village, olden times, small village, where there is a boy, okay, who happens to go out of village little towards the boundary of the village to take his sheep for grazing. And one day he thought, let me play a trick. Let me play a trick onto the people around me. And so he just came running to the village where the elderly people were sitting and started shouting, there is a tiger coming in here, please help me. So everyone dropped whatever they were doing, collected whatever weapons they could. Some collected stones, some collected sticks and everything, and they ran behind him and started looking after the tiger. And 1 hour, 2 hour, looked around everywhere. They could not find the tiger. And so this kid started laughing at them, say, how you guys are fool, you listen to a small kid like me and you waste your 2 hours. Good, okay, no problems. People were a little upset. His father scolded the kid, went home. Everybody started working. This kid wouldn't stop though. After about 15-20 days, he would do it again. And again, the farmers, again the villagers, they came around helping the kid, searching for the tiger. No tiger. Happened 2 times, 3 times, 4 times. It happened like this for about 4-5 times. And then the villagers started thinking, was ye pagal hai? I mean, this is a crazy kid, and he would always do something like this. And if he talks about it next time, we are not going to bother. So they stop bothering. He'll come, there is a big tiger, there is a lion, there's this, that. But they would say, no, forget, go get lost. One day, the real tiger came. When the real tiger came, the kid came running. And the kid came running, and kid told the farmers what was going on. And the farmer said, go get lost. And the kid definitely went to his home, and he locked himself and he saved himself. Definitely okay. But that day, the tiger killed some of the cattle. And the moral of the story is, there are false alarms. Okay. And if there are too many false alarms, and if you keep on getting too many false alarms, you tend to reject even the right alarm. And that is exactly what your reversal indicators do. Okay, so if you look at most of the indicators on the chart, although on the chart they would look very, very nice, like a kid, they are shouting, hey, market is stopped, market is going to move up, market is going to move down. But these are all indicators shouting in different ways. Okay, some indicators are talking that market is going to go up, some are saying no, RSI oversold, now upar jayega market. Some people say divergence, but the divergence doesn't work. So there are a lot of things that happen in the market, and you are the villagers, okay? And you are taking decisions on those, I may call it rumors, not really rumors, but those messages that you get from your indicators. I have proven it ample number of times to myself and to a lot of my students that most of these indicators do not work more than 40% of the times. The best of the best strategies that you would try to build, you would get 40%. If you get 50%, you are lucky. If you get 60% above, you are super lucky. But most of the indicators would not work more than 40-50%. Where you make money is because the risk reward is better or whatever, blah blah blah. So if you look at it from that point of view, and if I've seen a lot of people, their indicator pane is full of indicators, this indicator, that indicator, that, and then you get confused yourself. The only thing that happens is RSI buy de diya, lekin stochastic nahi diya, so let me wait for stochastic to give buy. Now stochastic has given me buy, now CCI has to give me a buy. Now I need to wait. Now I think I should wait for 5-8 moving average crossover also, and by the time that comes, your RSI is already overbought, and then the whole story repeats. So just adding more indicators don't help. You need to be very, very intelligent in adding the right indicators which complement each other. Okay, so that is the first point. Second, very, very important point, and this you would have noticed in the market, you must have. The markets always try to be ahead of the news. They want to be ahead of the results. They want to be ahead of everything, okay? Because the participants, they think if they wait for the results to come, if they wait for the news to come, then they will not make money, right? It's always a battle. It's always a race that everyone wants to run. I want to buy before anyone else because it may go up, or I want to sell before anyone else. So now that's one thing, and that is why you would also notice that your fundamental analysis may not work, because by the time the news is out, the PE of the market is already moved up. So there's no buying, okay? So there are a lot of sentiments, and there are a lot of fake breakouts. There are a lot of such things which happen in the market, that markets go ahead of itself and then retrace it back. So that is the next point. The next point that I want to make is the FNO traders, the futures and options traders. They believe, they feel that they are superhumans. They believe that they want to be even ahead of that market, which wants to be ahead of the news. They want to be taking trades which are even better. So for example, today Nifty is wherever, and I would see 200 point, 300 point ahead of Nifty also getting a lot of interest, and people want to say now Nifty is going to go sideways, or now Nifty is going to go directional, or whatever. So they also want to be ahead of the markets. Now with all these things, how do you really make your own decisions? If you really want to be a successful options trader, you would need to be like those FNO traders, and you need to preempt the moves. Okay, the question is how do you preempt the moves? You need to preempt the moves, and you need to take your risks. For example, when I entered this trade, I preempted the move that the market would go up, but at the same time I wanted to save myself. Even if it goes down till 17,400 points, no problem, I still want to go home with some money. Okay, that is what I was looking at. So that is what you should also be doing it. But again, the question is, how do I do the technical analysis? This little busy slide, don't worry about it, but there are only 3 rules that I want to give it here. The first one is have a long-term view of the market. Okay, where is the market headed to? And you may be wrong, doesn't matter, but you need to have the view. Okay, what is your fundamental view towards the market? I probably think that now US QE is going to taper down and going to stop in May. The markets may actually see some correction. I know that there will be some surprises, positive or negative, in the budget. So pre-budget rally cannot be ruled out. if there is a pre-budget rally, there could be a post-budget crash, or it could continue. I don't know. So you need to have your own point of view on the markets. The results season is going on. So whatever results are going on, based on that, you form your own view, and you need to trade. You need to have that back of your mind while you make your trade. Next one, very important, technical analysis. In technical analysis, these are your different horses, okay, and you want to ride on different horses at the same time, and you want to see where exactly market is going to be headed in terms of technical view. So 55-day, 54-day, 34-day, these are all Fibonacci numbers that I use. So 1, 2, 3, then 5 is weekly, then 8, 13, 21, 34, 55. So I would do analysis on different days. Why? Because market has a fractal nature, okay, and I want to know in this particular market has got only 5% effect. I don't play RI, I don't play multiple dollar to look at it in the charts, and it's out of a lot of policies that I've done. If you're on and the trend will last for about 35 days, 35 candles. 35 candles would be about 2 months, right? So if you're on 5-minute candle, then the trade will last for about 35 candles. So 35 or 5 minutes. So there are about 75 candles in a day. So it would be about half a day trade. So if you are on weekly would be about 35 a week, which is around half a year kind of trade. So if you want to trade more for half a year, you get weekly candles. Weekly candle will become your wave, and then you would decide you decide. The next one, you trade against the crowd. Anyway, 95% of the traders lose money. That is what Zerodha is also saying based on the data that they have. So you go against them. So if the call premium is going up, you short that call. But of course, you have to look at your charts, which is point number 2. If you see high IV, you sell the options. If you see low IV, you buy the options. So you are basically going against the crowd just to improve your probability of win. So these are the only basic 3 steps, okay? And if you ask me, today I'm going to be covering the first 2. Not really first one so much, maybe high level technical, and then let's look at the multi-frame analysis. Let's try to go to the charts from here on. I hope you would be able to see my charts. Let me go to just give me 1 second. Okay. So this is my AMI broker, and I have been using AMI broker, so I'm using AMI broker. You don't need to be using this. You could use whatever you want. Really does not matter. Okay. So the way I look at it, it says my screen sharing is paused. Let me just try it one more time. Resume share and stop share and share screen AMI broker. Okay, so I hope you are able to see my AMI broker. And if you look at it, we had a lot of debate on the way the markets are looking like, and where the markets are headed, and what is the Elliott count. I usually go with Elliott count. So you had this all the way from 1998. You had a wave 1, and then wave 2 corrected almost everything. Okay, it gave away almost everything. I'm not getting into details. No point in talking what happened in 2000, 2001. But this was a 2000 crash. After that, you had a wave 3, and at the end of the wave 3, you had even the panwalas and auto rickshawalas wanting to get into markets, and which resulted into 2007, 2008 crashed. Okay, so that was another crash. So that was wave 4. After the wave 4, the markets moved up very nicely, but then you had a finish of wave 5, and then markets really pained all the technical analysts. A lot of technical analysts were confused as to what happened between 2018 and 2020. This is my view. It was an expanding flat correction, an ABC correction, which ended in March 2020. and I made a mistake initially in counting this, and I was expecting from somewhere around 11,000 when the market started going up, I expected one more down leg. I made a mistake, no problem, doesn't really care, because I was still making money with my tradings. But now I believe that this was the first wave which got over with this wave C, and then now we have started a kind of a wave 3. So this whole wave is a wave 1, and then you had a wave 2, and then now we are in wave 3. Okay, so this is not wave 3, this is one of wave 3. Okay, fractal nature. So for example, this one is same as this one, but at a higher level. If I have to draw it, let me just quickly draw that. I'll draw it with this guy, which is little thicker, and I'm going to draw it with blue color. So this is full wave 1, this is wave 2, and now we are going to have wave 3, which is going to be a huge wave 3. Okay, so if I have to look at, and I may not be able to show you perfectly there, if I'm going to be right, then let me just reduce this. Let me go to 55D, and let me just do my Fibonacci extension. So this is my wave 1, and this is my wave 2. So if that is there, then my wave 3, I'm expecting it to go all the way to 25,000, which is very, very much possible. Okay, you could look at it on a yearly chart, because for some reason AmiBroker doesn't do this here. So if I do that, we are talking about next target of 25,000, and if that target of 25,000 has to achieve, now this is wave 1, then there would be a wave 2. This is the way it is going to happen. Most likely you have a wave 1, wave 2. Wave 2 can retrace a lot, then you would have a wave 3, then you would have a wave 4, and then you may have a wave 5. Okay, so that is how you may actually end up seeing this market reacting. So that is my view to the market. I may be wrong. I don't care if I go wrong, because I want to make money. But you need to have a long-term view on the market. So let's go to weekly. I'm not getting into too much of details of the history of the market and other things. So if I look at that history, look at that last move, which I call wave 1 of wave 3, and this rather has been very, very aggressive move. Okay, so you had a wave 1, wave 2, wave 3 of 1, 4 of 1, 1 and 5 of 1. So this was my wave 1. Why I'm calling it wave 3? Just a quick thing. If you look at the, let me just go to 21D. If you look at my oscillators, this is awesome oscillator. My oscillator for this last move, you look at the way it has gone up. Now this cannot be wave 5. This is a wave 3. This is a structure of wave 3. Another way of looking at it is, you just look at the slope. Okay, let me delete this guy, and just look at the slope. If I draw this and drive it out, this is the slope of last move. You don't have any place where this kind of slope is beaten. Okay, wave 3 characteristic, it is a very, very aggressive wave. It moves very fast. Okay, another thing you would see, and I would show it later, whenever this level was crossed, you would see the candles. Okay, you see the candle structure. Usually whenever the resistance is passed in wave 3, you would see acceleration. That is what again we have seen. The good thing is, this wave 2 may not correct all the way below 12,000. If this is wave 1, then wave 2 usually will not come below this. There are times when it may come down also. Okay, so what is the potential size of wave 2? Let's first estimate that. So I would draw a Fibonacci here, And I would say that 38%, this is the first target, 14,300. The second target is here somewhere, which is 13,000. The fourth target is somewhere here, which is around 11,800. And you may also see a 78% retraction. Wave 2 usually retraces a lot, so it can also go to 10,000. Okay. Now, whether it goes here, 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 or here, we need to see. But again, that is going to be seen with the internal structure. Okay. Now, that internal structure could be an ABC flat, it could be ABC zigzag, it could be expanding. It doesn't seem to be working out this time, or it could be a flat correction. Either ways, whichever the correction it is, these are my targets. And if it is a flat correction, it would probably be somewhere here. I have drawn this with the darkest color because that is where my earlier wave 1-4 is there. Okay, and this is also another target which is there. So I am expecting markets to come down to 14,400 levels. That is my expectation from the market on the weekly charts. Now, if I go to the daily charts, I clearly see the first wave. Okay, 1, 2, 3, 4, 5. Okay, now if that could be a 1. That could be a 1. Okay, so if I go to daily time frame, this is how it looks like. You have got a 1, you have got a 2, you have got a 3, you have got a 4, and you have got a 5. And now this could be either a 1 or an A. I'm not very sure whether it is 1 or A. And this, if it is 1, then this would be 2, or it could be either a B. Okay. Now, whether it is 2 or B, it really depends. If it is 2 or B, it may actually come down, correct a little bit, and then finish the correction, and then you are happy and you are going to start moving above with the wave 3. Okay, then in that case your correction is not going to be very sharp, but if it is 1, then you would have a 2 here, and then your 3 would be very deep. Okay, and then you are talking about way below. Okay, another way of looking at it, and I have seen this happening many times in Nifty finishes the correction only with 5 waves. Okay, 1, 2, 3, 4, 5. First A, and correction is over, markets start going up. This is a typical thing that you would see in markets which really want to go to the great highs. Okay, so there is also a possibility that this is the one of third, and you would have a 2 wave down, and then I'll just quickly draw it. Let me delete these guys first. Let me delete this guy and delete this guy. So the other way of which I would see is the correction is over. This is my 1. There will be a 2 which will come down, and we start the third. So that is also a possibility. So there are now I'm working with 2 or 3 possibilities. The first possibility is this is the wave 1, and this is a correction on wave 1, wave 2, and now from here the market is going to go down. When the market has to go down, let me just start looking at oops, I made a wrong choice. If I have to do the targets could be if it is A, B, then the target for here is, first target is this, and if it is wave 3, the target would be here, and you also have one more target which is here. Now, if I go back to my weekly, okay, if I go back to my weekly, this target is very close to my wave 4. Okay, so what I'm going to be doing, I'm going to be making this with the bold, and everything else is going to be a light target for me. But I want to keep these targets in mind so that I know where the market can all the way correct to. Okay, so that is the first one. If there is only a wave 2, and if it is wave 2, and then where the market target would probably be, my first target is 50%, and my third target is 61%. Okay. I have to draw a triangle. Okay, so this is my second target. So there are now, I have got a lot of targets down. I don't have too many targets up because the market is now started coming down. So my current trend, I want to see where the trend is going to end, right? Final trend. And this also is not going to be one single sided. It will come down, go up, come down, go up. Okay. So now if I need to take a trade, my first trade could be for targets of 17,200. Okay. Now, but since the markets don't come in single direction, I would then be waiting for this. See, you see 1, 2, 3, 4, 5. Let me get rid of these vertical lines. There are too many of them. Okay. Now, if you really look at this, there is a 1, there is a 2, there is a 3, there is a 4, and there is a 5. Now, this 5 may end up sometime soon, and from here it would correct. So if it has to correct from here, then it would probably correct somewhere till 17,900, again 18,000 levels. Okay, so there is a possibility that market still wants to go down. Now my hat may be going down unless the market goes above 18,600 levels. Okay, so now this becomes my major stop loss. I draw this with magenta. This is my favorite color for deciding the stop loss. Okay, select magenta, bold. Okay, so this is my stop loss for my short expectation. So if it goes above this line, I'm going to change my hat and I would start going long. Okay, so then if that goes above there, my target is 19,200, which I talked about it. So if from here, when the market corrects, I'm going to take a short entry. Okay, I will probably talk about that trade also. That is what I'm expecting the markets to go. Here, if you really look at it on 25-minute, you already have the correction going on, and the markets should go somewhere here, 17,900 to 18,000 levels. Okay, so this is my first expectation. This should be yellow actually, and not bold. So this is my first expectation, and when the markets come here, my trend is going to be down. Okay, this is my first high level multi time frame analysis. There's one more thing that I would quickly show you, and I really love talking about it. I don't want to talk about a lot of things, and I will also be looking at different harmonic setups to call the exits. So I have something which plots harmonics automatically. I also track the options, premiums and HV and IVs at different time frames. But this is the most important thing. And this I look at it from weekly point of view and from daily point of view. Very high level, it doesn't give me the perfect lines. And I have already put together a lot of material on my YouTube channel. You got videos. How do I draw supply demand lines and supply demand areas? So if I look at it from all the way from the down, you had a very huge, this was I think a weekly demand area, or this was weekly demand area from where the market bounced off. Okay, and when they bounced off, the bluish color, bluish teak color is the daily. That is where the daily demand area got created. And then it see, this is what I was talking about. Whenever it crosses this top, okay, you would see a gap and you are seeing this going up. So there is a very, very high probability that this is a wave 3. I mean, you should have the experts should have looked at this and taken the trade. I made a mistake. I definitely made a huge mistake of not being in the market in this last leg of the rally. I was there in this leg and I expected markets to go down. It doesn't really matter. That's the learning. But now from here on, if you go into the details, let me now go to the dailies and let me start talking about where are the resistances based on supply demand area. So this is where I was expecting it to go and start coming from. but it did not. But instead, what the markets chose to do was to go all the way to 86.6. That's the Fibonacci level. I'm just going to quickly put it together, 86.6, and get rid of multiple other levels. We don't need them. So this is where exactly the markets chose to reverse at, okay, which is a tendency of wave 2. So this is wave 1, and then this is probably wave 2. We will see if you see this level 16,400 getting crossed with a gap, with big candle, major selling around this area. So this demand area, the daily demand area, becomes very, very crucial. If you see gaps around here, if you see this, let's see how, and if you really look at it, now we need to look at where exactly it is going to be going from. Okay, so that is the first thing, and then you are going to be looking at these wavy tunnel levels on 25-minute or whichever to take your trade. So that is how you would be looking at that. And if I look at the 75-minute time frame, the resistance levels, we are very much around the resistance level, support level here, which happens to be between 17,600 to 17,750. And during this level, market may go sideways, market will react to this level. Definitely it is being seen on the 75-minute candles. Markets does not want to break these levels immediately. So you would see time again and again that these levels are getting honored, and these levels, see for example here it broke but again tested and then came down. Now again it came up here, honored the levels, came back. From here it again went, broke those levels, went to the another level, came back to test these levels and go back. So this level seems to be an important level from the point of view of our markets. So I don't expect it to be broken immediately like this. I expect the markets to honor these levels, go up, and that would be my opportunity to go short in this market, hopefully. Or if it breaks around, then I might wait for it to break and then come back for the support and then go up. So I hope I have made myself very, very clear about how I expect Nifty to behave. Okay, let me go back to my let me go back to my presentation and continue from there. I need to stop the share. Sorry, I need to stop the share and I need to start the new share. Here. So this is what I would talk about it when I talk about the multiple time frame account. So this is your wave 5 and ABC correction, and probably you are going up in ABC. Nifty weekly seems that your 5 waves are over, and now you are talking about this is either a 1 or an A, and then correction is also probably over, and markets are going to go down. Keep stop loss of 18,600, 700 levels. Okay. Same old story again and again. I am going to stress this again and again. I am doing all these things because I want to make highly consistent earners out of this group, and people who would have very high reward to risk can go with the automation and reduce the stress of trading. I have got I've been doing different multiple trainings, and planning to do right now technical analysis on 12th and 13th of February. So if you want, you should not miss this particular course. In this course, I'm going to, whatever I talked about today and a lot more, we will go into a lot of details and try to see what works, what does not work, with lots of hand holding. Once I take you as my students, I make sure that you are there and you become really successful. So please make use of this. How you would do it? So what you need to be doing to get to this course, come to this URL. I have already shared this. You could also look at this course from course.learntoinvest.in. There are these courses, and complete technical analysis is the course. What do we cover in this particular course? The first, we talk about what really moves the market. How does the price discovery happen? The auction theory, intraday battle. Then we talk about candlestick analysis, introduction to market profile. This is one of the best tool that I have ever seen. We talk about fractal nature of market. We touched upon it today a little bit. Triple screen method from Elder. Then we talk about what is the difference between trend following and trend reversal. How do I identify trends reversals? So Gann swing chart, supply demand analysis. We talked about it briefly today. Regression trend analysis. Then how do you identify the trends with moving averages? Then we talk about momentum indicators, turning points, where exactly the high likely point of turning. We actually did something with Fibonacci, but Fibonacci is not the only one. We could do it based on pivot points. We could based on the volume profile. Works perfectly well. Fibonacci, harmonic patterns, and then of course the reversal indicators don't work so well, but we still cover that up. And then we start talking about the setups, trade setups. So how do you use Ichimoku, how do you use Bollinger, how do you use Elliott waves, how do you have what practical tools are there for using Elliott waves. And then we finish with the actual analysis, very detailed analysis, and then way ahead. If you want to be making this course, please do look at the offer that I have right now for you. And I am going to be giving you a straight 50% discount by using this code special 0011. So don't forget this code special 0011, and don't forget the dates 12th and 13th of February. So if you really want to join the journey, please do it. Let's make informative decisions. Let's be intelligent for our money. very quickly, I will just share this with you. You go to this site. Here you have this course. What does it have? We are talking about the uh, uh, basic things. What really moves the market? How does the price discovery happens? What is the auction theory? How the intraday battle happens? Then we talk about candlesticks, how the candlesticks work. We talk about market profile. uh, Market profile is one of the best tools that I have ever worked. Then we talk about fractal nature of the market. We talk about triple screen. Then trend following. What is trend following? What is trend reversal? Very basic, simple things. Then we talk about dance swing charts. We talk about supply demand analysis that we talked about quickly. Regression trend analysis. Then how do you identify trend with the moving averages? Then we start talking about different momentum indicators, where the markets usually turn. We just quickly talk about Fibonacci levels and other things, but not just Fibonacci. There is pivot level, there is volume profile, there is, oh, give me 1 second. So